Well, Asian markets, they have jumped up in early morning trade following a rally that we saw on Wall Street in the overnight session. Strong manufacturing data out of the United States as well as China. That's helped allay some investor concerns with regard to a slowdown in the global markets. On the back of that, you have the Nikkei that's up close to around 0.5%. Todd, yesterday we were telling you that the yen was holding at around 111. Well, a weaker yen is good news. It's gradually moving towards the 111.4 mark. So good start there for the Nikkei. But not just the Nikkei, that's a roll-up market, right? If you look at the other markets as well, the Kospi had opened up with a gain of around 0.4%. That, in fact, is still holding in the green. And both the other markets, the Straits and the Taiwanese index as well, opening high with a gain of around 0.5%. Yesterday, you had the Nifty that came off the high point of the day. But this morning, it's indicating a mildly positive start. Maybe 15 points is what we'll get in the green.
All right, so that was all of the action from Asia, but let's take a look at how Wall Street fared now. U.S. stocks kicked off the week with strong gains after better than expected Chinese and U.S. economic data suggested that the slowdown in the global manufacturing industry may be easing. The Dow rose over 300 points, while the S&P 500 and the Nasdaq both climbed over 1% each. In terms of data, U.S. manufacturing activity expanded, coming in at 55.3% in March. Now, this is versus the 54.2% we saw in the previous month. CNBC's Aditi Roy gets us a wrap of all of the action on Wall Street.
U.S. stocks off to a strong start to the second quarter. The Dow adding 329 points, the S&P higher by 32, finishing the day just more than 2% away from its record high, and the Nasdaq up 99 points. Retail sales unexpectedly falling in February. New furniture, electronics, groceries, and clothing. The biggest decline was in building materials. J.D. Power says auto sales could be the lowest in 4 years, despite strong demands for SUVs and trucks. The firm projecting the annual sales rate in the U.S. could drop to 16.7 million, due in large part to higher interest rates and higher monthly auto payments. And cereal giant Kellogg is selling its Keebler, Famous Amos, and some other cookie brands to Italy's Ferrero for $1.3 billion in cash. Ferrero, which owns brands like Nutella and Tic Tac, reportedly beat out Twinkie and Ho-Ho's maker Hostess Brands to secure the deal. That's the action from the U.S. market. Back to you in Mumbai.
All right, thanks a lot for that, Aditi. But on to some important opinion coming in from Allianz Chief Economic Advisor Mohammad El Arian. He says that markets are likely to be volatile, but the economy is in a good. He says that things are only going to get tougher for Fed Chair Jerome Powell. Listen in.
My basic view is the U.S. economy is in a good spot. We're going to grow by 2.5% and 3%, and the problem is outside. China's PMI is encouraging, but did you see Germany today? Yeah. Germany revised down to the worst numbers since 2012.
And yet the stock market there in Germany is the biggest advancer in the European continent today, too.
Because they're thinking two things. One is China matters, and two is the ECB is going to be even more dovish. It's about central banks. If you look at what happened in Q1 versus what happened in Q4, the only significant difference is that central banks got much more dovish, and that's what it's been all about. Yields on government bonds came down, so all the traditional correlation failed once again to tell you this is about liquidity, not fundamentals. And that's where the argument comes in for rate cuts. I don't think you need them. Why? Because I think the U.S. economy is in a good place. On the one hand, the White House pressing for 50 basis point cuts. Not only do they say cut, but they specify how much you should cut. On the other hand, federal officials saying not only are we unlikely to cut this year, but hikes aren't off the table. And you don't want that to develop. And I think the Fed will be disappointed that its uber dovish U-turn hasn't got it off the stage. It wants to be off this stage. It doesn't want to be on it.
Well, turning attention to the European markets, they ended higher. Investors out there, they digested the stronger than expected manufacturing data, first coming out of China and then the United States. Meanwhile, the Brexit deadlock continues in the United Kingdom Parliament as vote on alternatives to the Brexit process have once again failed. Now, meanwhile, reports suggest that Prime Minister May could put forth her withdrawal agreement to a fourth vote later today. Remember, the United Kingdom has around 2 weeks to decide a way forward for the Brexit process or risk leaving the European Union on April 12th without a deal.
All right, in the currency space then, the dollar rises as ebbing concerns about global economy boosted U.S. bond yields. Meanwhile, the yen holds steady versus the U.S. currency.
right, then not too great news in terms of crude from an Indian economy point of view, because Brent crude prices gradually moving towards $70 per barrel. Remember, crude oil price rose overnight as US officials said that Washington is considering more sanctions on Iran. Meanwhile, a shutdown of crude export terminal in Venezuela, which has halted operations due to lack of electricity supply, that as well is supporting prices. So you have NYMEX at around $62 per barrel and Brent holding at around $69.50 per barrel.
Okay, so that was all of the commodity and currency action, but time for a quick break now. Up next, all of the cues and news you need to know for trade this morning.